Inflation is creeping back down from its highest level in 40 years, but it's still up there at around 3.7%. That's according to finance site WalletHub.
Yeah, today the Fed decided to hold interest rates steady, but say another hike could happen before the year ends. WCNC Charlotte's Jane Monreal is looking into how this impacts your wallet right now.
When it comes to your personal finance, we know high interest rates trickle down to all of us, consumers. I talked to a local expert who has some tips on what to do with your money now so you're not left wondering, where's the money?
When the Fed raises the rates, right, the banks are raising the rates, and so it's getting more expensive to borrow. And so if it's more expensive to borrow money, right, that's going to affect our mortgages, that's going to affect our car loans, that's going to affect credit card interest rates.
Brian Lee teaches personal finance at Providence Day School in Charlotte, where we caught up with him after class. First, the basics. The Fed raises interest rates to combat inflation, but that makes it more expensive for us to borrow money. Lee says something to consider when the rates are high like this.
If they can, really try to bring down that credit card payments. Try to pay off their credit cards. As rates are higher, this is a really good time to really focus on paying off that credit card debt.
On the flip side,
if banks are charging more to borrow money, the flip side to that is savings accounts rates are up. So this is a great time to bolster your savings account in a high yield savings account. So a lot of them are offering around 4% right now.
When it comes to investments,
if I knew when to time the market, I would be on a tropical island somewhere.
He says if you're years out from being in a position to retire, be patient with your portfolio.
It's not about timing the market, but time in the market. So long-term, steady investments in a well-diversified, low-cost, broad-based group of index funds that covers various sectors, that's going to be their best bet because timing the market typically does not lead to good results.
Jane Monreal, WCNC Charlotte.